Central banks have been buying up shares, toxic assets, bonds, corporate debt, and any other garbage that they can get their hands on. We are in the everything bubble, where virtually all asset classes are rising. There comes a time in which the central banks will pull back on their generosity, a time in which they will dry up their liquidity. What will happen then? You came here for the truth, so let me unveil that for you. Today we're going to look at the Federal Reserve. We are going to look at other central banks. We're going to look at housing and so much more. Let's begin. Fed balance sheet taper plan. We saw 4 different programs, QE 1, 2, and 3, plus Operation Twist. You can see what has happened to the Federal Reserve balance sheet over the years. Coincidentally, the S&P 500 moving in lockstep, give or take. Looking at the G3 central bank balance sheet, you get the exact same reflection. Now, the Federal Reserve has suggested that they're going to pull back on their liquidity. They're going to taper. Estimated balance sheet reduction plan. This is the proposed decline in their balance sheet over the next few years. I would suggest to everyone that we will see stocks moving in the exact same direction should they pull back on liquidity. Now, why do I say this? It's very clear to me. Stocks have been rising because of central banks. They've been buying the shares with printed up money, and as a result, the stocks rise. We know that because they've been admitting it. Look at the Swiss National Bank, look at the Bank of Japan, and even look at what the ECB has been doing, buying up corporate debt. Might as well be buying the stocks directly. This has allowed the stocks to rise, or in certain cases, stay alive. If they pull back on it, why in the world wouldn't stock prices come down? This is not my prediction. This is a fact. I don't make predictions like some other gurus out there. I just look at the facts, I present them. These are the central banks around the world, and lo and behold, you see a familiar tone with all of them. The central banks saw a crisis coming, and they reacted. They printed up currency. I believe the statistics were publicly $15 trillion printed in the last few years. That's a relatively decent amount to be floating around in the system, to be buying up all of the worst garbage possible, and essentially devaluing the currencies worldwide. What are they devalued against? Each other? Well, not really. Perhaps, so that does occur, but they're being devalued against real goods. When you go to the store, you buy your food, chances are it's more expensive than it was 5 years ago. When you have to pay your electricity prices, you may find these prices are higher than they were 5 years ago. So it doesn't surprise me when we see this type of information. All central banks react in the same way because they meet together behind the scenes to decide how it's going to be. Doesn't mean that they all need to print at the exact same time the same amounts, no, but they are obviously doing this in concert. Fed balance sheet changes versus the S&P 500. The blue line is the S&P 500 index. You can see where it has gone. And looking at this, the net change to the balance sheet. I thought this was quite interesting here. First of all, we are told that QE3 is over, almost suggesting that there's no printing going on, but that's not how it works. Because the debt that they've purchased has to be rolled over. You see different things that have happened. There was a little market correction here. You saw the Brexit. You saw everything, the election and everything else. Right now in October, you can see that here. A large spike upwards in this. In fact, it's $13.5 billion worth. That is a very large amount considering that they're talking about pulling back on liquidity. Why would they do this? Why wouldn't they use this as an opportunity to start allowing these, at least marginal, a very, very small amount? Do something with this. Use it as an opportunity to stop rolling over the debt, to stop printing up new currency, because we know that behind the scenes, of course, they're doing that. No, that's not what they're going to do. They're going to continue to print. If they pull back, stocks are going to go down. Looking at this, free healthcare. It's an excellent idea, of course. And who's going to pay for it? Well, of course, the taxpayers. Oh, oops. Anyway, what we're looking at here is the average exchange premiums by metal level 2015 to 2018. And you can see that in every single category, people are paying more and more and more. You were told you were getting free healthcare, and as a result, you simply just got higher taxes. Higher taxes for everyone. The GDP will rise as a result, so that's a good thing, right? I mean, that's what they want to see. They want to see numbers. You want to see numbers doing well. And the numbers will do well. Of course, people are going to be worse off as a result, but they won't look at it like that. That is the truth, and you won't get that in other places. Look at the introduction of Obamacare, where you saw GDP rising in that particular quarter at 5%. Why? It was all attributed to that one reason. They didn't discuss that and disclose that, but that's the reason why. They simply said the economy is booming. Look at the numbers. So I think it's a fraud, to say the least, to be as polite as I can. Average change in silver plan premiums 2017 to 2018. Look at the different states. Each one is different. The median is 35%. Just imagine that. You were told you were getting something for free, and they ended up sticking you with it. So each state has its own trouble with it, but I would say that, there's only 3 here that are actually in the negative. I don't know how long they'll last, but that's 2017 to 2018 anyway. But look at this. I mean, come on. There's no way people can afford this. I love these 2 charts that I'm going to show you here. Median U.S. home price and median family income. Look at this. Median sales price of a U.S. home. You're watching this increasing year after year after year at such a high level, right? 1964, this chart begins, up until 2016, it looks like. But the U.S. income here, median income, is not even close. And as the years go on, you will see this continue to get worse and worse. And even when the assets do drop, because look at this, you can see this little dip right here during the housing crisis. It didn't bring it anywhere near where it needs to go. It should have corrected down much further just to be able to get it to be somewhat close to where it should be for the incomes to rise. Now, something else could happen. Your income could double and things would be a lot better. That's a good idea. So what we'll do is we will demand that we'll get double our wages from the government, from our employers, and I'm sure they'll go ahead with that plan. How does that sound? Sure. Ratio of median home prices to median family income. Again, years of work to purchase median home, it has continued to rise. Now this is a joke because I live in Toronto, where you would see this going parabolic. It is absolutely ridiculous for the amount of years of work. There isn't a lifetime that it would have to be for most people that are buying homes today with $1 million mortgages. I'm talking about average families. I am not talking about wealthy people. Millions in mortgages will never be paid back, but that's okay because everything is oh so fine and dandy. Well, that's all for this video. If you found it informative, please give me a thumbs up. Last but not least, if you found the video informative, I know you will find my books, The Money GPS and my newer release, Global Economic Collapse, even more informative. You can flip through these books at Amazon. The links are in the description below. Take care.